in simple terms, we're going to, this month, and this is why, many of us on the trading floors of the product markets think this month is an inflection point for products, is because that's a steep change to have a 5 million barrel a day change in refinery utilization between end of May and the end of June is a pretty steep change, and that combined with what we would expect more jet fuel usage across the world as we move through June into July, that should create an inflection point for the rate structures.
Yeah. Okay. And
I think that's why these oil companies and traders have been going in and taking vessels in on time charter, quite heavily now in this last 2 weeks.
Okay. The recent Suez Canal blockage, in the short term, it obviously had a big impact on the tanker market. Do you see any differences from what happened there, or was it just a short term thing, or it has more of a
No,
medium?
I think these things just show the like many other things that are going on in the world, whether it's delays in ports or or we'll soon have hurricanes. We're soon going to be going into the hurricane season soon in the Western Hemisphere. Just show how tight the supply chain is. Whether it's delays in dry cargo, whether it's container ports in California, having lots of ships piled up for waiting, whether it's the Suez Canal changing, whether tomorrow it could be a refinery outage or a hurricane. We have a very, very tight supply chain at the moment. So any short-term sort of blip is going to create some opportunity for rates to go up. Now that's going to increase as the demand increases. I mean, those things were happening on markets where the world was still opening up. Imagine if you have these dislocations, 2-3 months forward, when we expect the base demand in tankers to be so much stronger and the markets to be in so much better utilization anyway. So I think that we should just take those for what they are, which is nice little things to have, but they don't change the overall, fundamentals going forward.
And
Go
ahead.
I was saying this is very much, in our minds, turning into a very strong long-term, opportunity and value, in the sense that the fundamentals going forward are so strong for multi-years.
Yeah, and talking about the long-term thesis of the market, we touched upon a little bit on the order book, but considering the fact that now market participants see brighter future for the market, how do you see the order books staying low, or do you expect it to increase?
I think that's a great question. And I think this is one of the real opportunities. We've so far been facing, demand itself. And so if we do turn to this order book and supply, look, there's one of the reasons the order book's staying low is because there's such uncertainty about the correct propulsion system that you should use going forward. It's not really just the engine type either, but the supporting infrastructure. If, for example, you were to go dual fuel LNG on an MR tanker that was to trade in Latin America, how can you be sure that you're going to get LNG fuel as bunkers? The order book itself is literally at an all-time low since data was kept, and the product fleet itself is aging. Many vessels are turning 15 years old, which will remove them from the premium trades in the clean petroleum market. And another thing that's so important is that of course, ship owners historically, once they've got a little bit of money in their pocket, have immediately started to order. We're seeing that in container market. We're seeing that in dry market. One of the great things about the product market right now is that the yards are so full up going forward with all these orders from gas or from dry cargo or containers that, I'm sorry to say it, but it's what it is. It's almost impossible for us owners in the product market to screw this up for a considerable time, because we just can't get, berth space for 2.5, 3 years.
Well, that's interesting, because I didn't think about it. I know that the containers and dry bulk have been on a tear, but I didn't think of it in a way that because of the success in the other sectors, the building capacity is restrained.
Yeah, so in a weird way, we're sort of, it's not unusual in the two big mega cycles before, the 1980s and the early 2000s, the containers and the dry led the recovery, followed by products, followed by crude. And, one of the things that we're having today is this delayed gratification is helping set up a fantastic position in the lack of yard capacity for products. And the other thing that's important is that, yard capacity itself is probably going to be much more constrained than in the 80s or the 2000s. In the 1980s, we had the growth of Korea. Beginning of the mid-1980s, Korea were nowhere. It ended the 1980s, the largest shipbuilder in the world. In the 2000s, China was nowhere at the beginning of the 2000s. It ended the 2000s, the largest shipbuilder in the world. There is no emerging new building nation right now in the world. So we're kind of going with what we've got right now, which is being consolidating. And Korea and China have become richer countries. Chinese real estate is by the sea is much more expensive now. Another thing that's happening is the production. We sped production up tremendously in the 1980s by the use of robots. In the 2000s, we sped production up by the invention of block building for ships, which meant that the blocks could be built away from the shipyard, brought in, and the vessels assembled at the shipyard. Again, there's nothing really on the horizon that's going to materially change the production time of a vessel. So here, now it really does matter if we have a shipyard and berth capacity taken up at the front ahead of a product market recovery like it's happening now.
And what about scrapping? I mean, times last 12 months haven't been too great for the rates, so I was wondering if any scrapping happened, enough scrapping. What's your view on that?
Yeah, I think that a couple of things. So, first of all, in the product market, as we've talked about before, we're not really that concerned in scrapping. It's more when a ship is 15 years old. But it's always nice to see scrapping in tankers and in the crude side. And we have to remember that even though the stock prices last year anticipated the collapse in rates, the actual rates themselves, these companies generated a lot of cash. And so there has not been any pressure on somebody to scrap a tanker, even though the rates have been weak. And frankly, with with scrap prices just going up and up on the basis of steel, they've done the right economic thing in the last few months, which is to take whatever they can get in the market, even though it's poor, and just have an asset